Picture this. Monday morning, September 15th, 2008. You walk into office. Security guard stops you. Says, badge deactivated, go to HR. HR hands you box. You're laid off. Effective immediately. 20 other people same day. No warning. Company been there 15 years. Stable job, good benefits. Gone. You're confused. Company seemed fine last week. Orders coming in. Projects running. What happened? Walk out building in shock. Check phone. News alert. Lehman Brothers filed bankruptcy. $619 billion debt. Stock market crashing. Dow Jones down 500 points. You think, what does some bank in New York have to do with my job in Ohio? I work manufacturing. We make actual products. Not some Wall Street stuff. Then you learn your company needed credit line to buy materials. Bank said no. Every bank said no. Nobody lending to anybody. Lehman collapse froze entire credit system. No credit means no materials. No materials means no production. No production means layoffs. One bank dies. 10 million Americans lose jobs. That's Lehman Brothers. Today, Sarah, we're breaking down how Wall Street destroyed Main Street. Now let's get into it. The Lehman Brothers collapse. Quick note, this info comes from multiple sources. If something's wrong, drop a comment. We make economics so simple that anyone with zero knowledge can understand. Lehman Brothers, founded by 3 German Jewish immigrant brothers, Henry Emanuel and Mayer Lehman. 1844. Henry came to America, opened small general store in Alabama, brothers followed, 1850 renamed Lehman Brothers, foundation for financial empire, started trading cotton. Over century, expanded into everything, became one of world's largest investment banks. Before 2008, Wall Street giant, involved in nearly every major global deal, 4th largest investment bank in America. Before bankruptcy, total assets over $639 billion. Over 26,000 employees worldwide, operating in over 40 countries. 2007, revenue over $60 billion, profit nearly $4 billion, Fortune 500 company, clients included banks, hedge funds, wealthy individuals, real estate companies. Lehman Brothers was true heavyweight of financial markets. So how did they collapse? Story starts 2003, 2004, US loosened monetary policy, Fed pumped money, cut interest rates, made borrowing easier to stimulate economy, money cheap. Everyone rushed borrowing to buy homes. Real estate market heated like never before. Lehman saw opportunity, bought series of mortgage lenders to produce and trade 2 extremely hot financial products, MBS and CDO. MBS means mortgage-backed security. Basically bundle many home loans together, package as bond. When borrowers make payments, investors who bought MBS receive interest. CDO, more advanced version of MBS, bundles home loans plus other debts. Divides into multiple risk tiers. Simple terms, these are debt packages wrapped up and sold for profit. When real estate market still rising, golden goose for Lehman, 2007. They profited $4.2 billion selling these. Making so much money. What made them collapse? Thing that made Lehman collapse? Same MBS and CDO. These debt packages contained many risky loans. Even loans to people who couldn't afford repayment. But because high returns, everyone jumped in without seeing risks. Lehman bought too many bad loans to produce MBS. Their assets depended heavily on home prices. Home prices very sensitive to interest rates. With CDOs, Lehman misjudged risk. Many debts rated too favorably, though borrowers unqualified. When interest rates rose and people started defaulting, CDO prices crash. Lehman lost about $20 billion in extremely short time. Final punch, Fed raised interest rates. High rates mean higher borrowing costs. Speculators started running. Market froze. Nobody wanted buying homes anymore. Housing became illiquid. Houses for sale, nobody buying. Real estate prices, free fall. Home prices drop. Assets Lehman holding shrink too. Assets drop sharply. Bad debts increased. Investors panicked withdrawing money. Lehman didn't have enough cash to repay. They collapsed. March 2008. Lehman first reported loss since founding. June 2008. Total debt hit $613 billion. August announced cutting 6% staff. September 10th, everything spiraled out of control. Investors and partners simultaneously withdrew money. Lehman stock dropped 45% single day. September, Lehman held emergency meetings with Fed and Treasury requesting financial support. Got rejected. Only option, find someone buying company. Both Bank of America and Barclays withdrew. September 15th, 2008, Lehman Brothers officially declared bankruptcy. $619 billion debt, largest collapse in U.S. history, immediately removed from Dow Jones Index. Why didn't government save Lehman? During crisis, government saved many banks. JP Morgan Chase, Citigroup, Bank of America, Goldman Sachs. Pumped capital, made loans guaranteed them, but not Lehman. Main reason? Couldn't find investor large enough. Collapse scale too massive, 10 times bigger than Enron. If government saved Lehman, had to use tax money, citizens would oppose, would create bad precedent. Every bank thinks government will rescue. Market loses trust. People take stupid risks knowing government catches them. Government needed sacrificial lamb, calm markets, show consequences. Lehman was chosen. 5 main reasons Lehman collapsed. First, terrible risk management, held too many MBS and CDO, all real estate debt, misjudged our risk level. Portfolio, depended on single asset type. Second, U.S. real estate market crash, home prices dropped. All Lehman assets lost value. Real estate debts couldn't be recovered. Third, couldn't raise capital. Their debt too massive. Anyone looking feared holding bomb. Nobody helped. Fourth, used excessive leverage. Borrowed short-term. Invested long-term. In complex financial products. Slight market shake. Lost liquidity immediately. Fifth, lacked cash reserves. Didn't have enough cash paying investors withdrawing capital. Created panic, led to bank run. Additionally, Lehman used accounting tricks. Repo 105 technique. Temporarily moved debt off reports. Made company look healthier. When leaked, trust collapsed completely. CEO Richard Fuld too confident. Thought company too big to fail. Government surely would rescue. Rejected opportunities selling company or reducing risk when danger appeared. Bottom line, collapse was an accident. Was greed, excessive risk, terrible management, hiding information, arrogance? When these factors met global recession, no escape. When Lehman collapsed, what happened? Created global shock, financial markets free fall, other sectors dragged down, world stock markets dropped sharply. Dow Jones lost over 500 points. Day Lehman bankrupted, continued dropping following months. First impact? Citizens and businesses. Businesses couldn't borrow capital. Credit froze. Companies couldn't get loans buying materials, paying workers. Customers disappeared. Led to millions losing jobs worldwide. U.S. unemployment jumped from 5%, 2008 to 10%, 2009. Lehman alone, 26,000 employees, just one company. When other financial institutions cut staff, job losses terrible. Housing bubble burst. Home prices crashed. Many couldn't repay mortgages, mass foreclosures. Millions of Americans lost homes. Savings disappeared. Stock market fell like autumn leaves. U.S. GDP dropped 4.3% from 2007 to 2009. In Europe, many banks lost heavily, bought financial products related to Lehman. In Asia, export economies like China, Japan punched directly. Demand from U.S. and Europe dropped sharply. To prevent domino effect, U.S. government pumped thousands of billions rescuing banks. TARP packaged $700 billion. Buy toxic assets, pump money into banks. This money, taxpayer money plus printed money, led to high inflation. To prevent reoccurrence, government introduced new policies. Dodd-Frank Act 2010, biggest reform since Great Depression, increased oversight of financial institutions. Volcker Rule banned banks using customer deposits for risky investments. Basel III required banks holding more capital, more liquidity, less leverage. Stricter management of derivatives like MBS CDO required trading through public exchanges. Organizations must be transparent about risks. Credit rating companies Moody's, S&P controlled more strictly. Previously rated garbage assets as AAA. Now, more supervised, higher responsibility, accounting tricks tightened. After repo, 105 countries required disclosing true nature of transactions, increased auditing. What can we learn? Don't put all eggs in one basket, especially high-risk assets like real estate. Lehman fell into severe illiquidity because investors lost trust, withdrew money. Shows maintaining adequate liquidity, life or death, even for giants. Lehman collapse created domino effect. Global financial system tightly linked, very fragile. One large link breaks, entire network shakes. Before Lehman, people believed institutions too big to fail. Government always rescues. If they fall, economy falls. But Lehman showed nobody truly too big to fail. Businesses must prepare for worst scenarios, even without government backing. For individuals, don't put all eggs one basket. Always have emergency funds, have reserves. Never pour all money into one asset type. No matter how good it looks, only thing that never changes? Change itself. Market good today, garbage tomorrow. Here's question. Lehman collapsed with $619 billion debt, took down global economy. How many over-leveraged companies exist right now? What happens when next one falls? Don't forget to subscribe so you don't miss any videos.